Hey everyone, my name is Daniel and welcome back to the Finance Channel. I hope all of you are having an absolutely phenomenal day out there. As always, here today, I want to talk to you all about a company which you have most likely heard of and potentially even bought a product of at some point throughout the pandemic. The name of that company is Corsair, and it has been absolutely crushed ever since going public and hitting a high of over $40 per share and has now essentially been cut in half to 22 bucks. In this video, let's talk about exactly what Corsair is, what's caused their share price to decline so significantly, where I see Corsair going moving forward. We'll look at some models and price targets, and exactly what I'm doing with Corsair stock moving forward. So if you end up enjoying this video, please consider hitting that subscribe button. And with that all out of the way, folks, let's get into the video here. So first and foremost, keep in mind, it has been roughly 5 months since I have talked about Corsair on this channel. Now, I have never actually bought a long position in Corsair yet, and I may actually end up doing that, which we'll talk about in the back half of the video. But looking at Corsair's business model, a lot has changed over the past few months to the negative, which is portrayed in its share price declining so significantly. Now, we'll go through those reasons in a moment, but first and foremost, Corsair, they're a gaming company. They have a massive component called Corsair Gaming, and you can actually search their website up and take a look at the different products that they offer: PCs, headphones, gaming mice, and keyboards, a variety of products relating to gaming. Now, you also do have a couple different branches and companies that they do own, like Elgato, which focuses in on streaming and content creation. And in full transparency, I do actually use Elgato equipment for the channel. I have a microphone. Microphone right here, right? That's an Elgato microphone. And I have a ring light right behind me to, again, kind of illuminate my face. I've used their products. I love their products, and will probably continue to use and buy more products moving forward into the future, as they are very easily integrated within kind of what I do here on YouTube and integrate well together. So overall, they have a great platform. They have a great business, and the people that use their products, generally speaking, love them. You take a look at Amazon, they have 4 to 5 star reviews on pretty much all of their products. So they're doing things well. So why has Corsair's stock price plummeted? Well, it's essentially due to the whole fiasco that we are currently in the midst of, pertaining to inflation, pertaining to the shipping crisis that we're seeing, and the whole supply chain as a whole. Now, just today, we did get Jerome Powell, the head of the Fed, saying that he may start to taper bond purchasing at some point over the next few months, which is a pretty good sign when it comes to inflation declining, potentially interest rates going up. And I know some people who are in potentially growth stocks may get a little bit jittery when they do end up hearing that. But for a company like Corsair, lower inflation is something we want to see. Supply chains getting fixed, that is something we want to see. And what we saw in the third quarter for this company is, although they did miss on revenues, on profits, revenues actually declined 14.4% year over year. Profits came in at about break even. You did see them say, quote, "We have responded to the difficult sourcing and shipping environment by building our inventory in our hubs closer to our customers, but it has been difficult to pass costs onto our customers. We still expect good growth for 2021, but the various challenges are constraining it to closer to our initial expectations for the year. We believe that the actual demand environment remains good, and that once this difficult environment is behind us, we can return to our targeted growth and profitability targets. We have adjusted our 2021 outlook based on the current conditions." And they do actually talk a little bit about these conditions and how, again, you have costs such as shipping being elevated to kind of throughout the remainder of 2021, something we haven't seen in quite some time. But amidst all of this, they've managed to stay break even, which is a sign of a good company, at least in my opinion, throughout a time like this. They've managed to actually do decent on revenue. Obviously, it's not what we were expecting, the 20 to 30% growth, but it's probably going to be in that single high digit range. But it is still in line with what they gave back earlier in the year in the first quarter. So overall, they also did reduce their debt by right around 10%. So overall, a pretty decent quarter given what we're seeing. Now, the larger picture and larger questions that we should be asking ourselves as investors is, hey, can Corsair get past this? And if they do, where can the stock price go moving forward, which is what I want to target next. Where can Corsair go reasonably over the next 5 years? Whenever I invest in a company, I like to look at it from a 3 to 5 year time horizon, generally looking out 5 years. In the case of Corsair, we're going to do exactly that. Currently, the share price at around $22 per share at a valuation of just over $2 billion in market cap. Now, this is my model right here. We're going to utilize this to, again, input some kind of generally reasonable assumptions to come out with some potential opportunities. And we'll go through a bit of a base case, and then we'll go through more of a bull case. Now, we're currently expecting right around $1.876 billion in revenue in 2021. Now, that's what analysts are expecting, right? The company did say back here in the report right here, they're expecting anywhere from 1.825 to 1.925. But given that things haven't increased substantially in terms of getting better over the past couple of months here, I think we're going to go on the lower end of this target, kind of right in the middle actually at 1.876 billion. Now, analysts are also expecting right around 6.6% growth here in 2022. Now, whether that ends up happening, whether they end up overpassing this is again all dependent on supply chain issues. If those do dissipate throughout 2022, I think you may get that high single-digit growth rate, maybe even low double-digit growth rate. But again, we're going to go 6.6 here. I do want to be a little bit more conservative, and then we'll go through a bit of a bull case. And then moving forward here throughout 2026, I do have 8% inputted. This is assuming that by the time 2023 rolls around, things may get back to normal, and Corsair is back on their, again, trajectory of single-digit growth rates that, again, generally high single-digit growth rates. So that, in my opinion, is reasonable. Now, in 2021, they're expecting a net income margin of 7.1%, or at least analysts are, given what we already know. And in 2022, that is expected to jump back up to 8.1%. Now, I always thought Corsair was a business that could pretty easily get to a 10% net income margin. You look at a company like Logitech, another one of their competitors in the space. You take a look at Logitech. I think that, no, this isn't the right one. Logitech, they are on the European exchange or whatnot. But either way, you have Logitech, their net income margins are, and I'm going to actually highlight this so you guys see it, they're right around 8% back in 2016, 2017, and have actually grown to the mid-teens as of late. So they've managed to get their net income margins up from right around 8% to 12 to 15%, which I think offers a bit of insight into where Corsair may get to over the next few years. Again, this is a company that has been very concentrated on growth over the past little while, and I do think profitability will be more of a thought of theirs over the next potentially half decade here. So we'll see what happens, but generally speaking, I think 10% is a little bit conservative, given again, Logitech has significantly outperformed that, and they're more of an established business. But again, Corsair, more of the premium market, that's what we got. So again, assuming that 10% net income margin, we get roughly $272 million in net income on a yearly basis by 2026. That is money that is coming in essentially its purest form to the bank by 2026. Now, these are PE ratios, right? 15 to 20. Those are kind of reasonable for a company growing at this level. You don't really want to overshoot it, as you know, you want to be conservative. And with a business growing high single digits, I think 15 to 20 is pretty justified in my opinion. And you kind of see, again, multiplying the net income by these different PE ratios, you get upside ranging anywhere from 2 to maybe 2.5x over the next 5 years, or a compounded annualized growth rate of 14 to 20%. That is beating the market, right? Which on average has ranged right around 7 to 9% on a yearly basis. So you're outperforming the market in this base case scenario. And I think that is something important to understand, because if this company outperforms, these returns go up significantly. Let's take a look at two things. First and foremost, revenue. Let's say this company outperforms. 2022 is better than expected, and we end up returning to that path of growth, which Corsair mentioned in their recent conference call. Let's say we get 10% growth, right? And that significantly increases even the 2026 numbers, because again, you're seeing more growth in 2022, and then that continues to compound. Now, I don't want to go too aggressive here, so I'm going to go let's go 10%. 10% right here. and then we'll go 9% and 8%, right? A little bit more bullish in terms of revenue growth. We'll see if they end up doing that. Actually, I'm kind of comfortable doing 10%. Maybe they end up acquiring some companies with the cash flow that they do end up having. So that's what we got, just over $3 billion in revenue by 2026. In terms of net income margins, this is where things get very, very exciting. The opportunity, in my opinion, with Corsair is the opportunity with margin. As we just looked, Logitech has had roughly 15% net income margins over the past few years. That is very, very well within the realm of possibility for something like Corsair. But again, to kind of maintain that area of conservativity, whatever you want to call it, let's go 9%, increasing that to 10% by 2024, 11% by 2025, and 12% by 2026. Obviously, the returns increase substantially to a point where I could, kind of reasonably say that this stock could very well be trading anywhere from $60 to maybe even $80 per share 5 years from now. That's the opportunity that I see with Corsair stock. In the base case, right around 100 to 150% upside over the next 5 years. In more of the bullish case scenario where maybe they expand more into cloud, which they have been doing, and that is kind of the plan, expanding into more of that high margin, maybe even subscription-based revenues over the coming years. So I look at all of this and I say Corsair does have opportunity. If you are someone that believes that this supply chain constraint is something that will dissipate over the coming quarters, Corsair may not only be an interesting long-term opportunity, but also an interesting multi-quarter opportunity, which, if we end up recovering from this supply crisis sooner than expected, Corsair's revenues and margins will increase substantially in a very short amount of time, potentially leading to some more optimism in the stock. So I look at Corsair right now, they're priced for failure, and anything above that will probably end up being rewarded handsomely. Now, does that mean Corsair can't go any lower? No, it doesn't. Corsair could very well go under $20 if the markets continue to fall. Obviously, it's getting bundled up with this whole argument with interest rates and bond purchases potentially stopping. But generally speaking, inflation going away is a good thing for Corsair's business model and a lot of other business models out there. Now, obviously, it ranges by company, but I'm optimistic about Corsair. Let me know what your thoughts are in the comment section down below. Now, in terms of what I'm doing, in terms of my portfolio, when it comes to Corsair stock, I currently do not have a position in Corsair. Now, do I plan on potentially adding this? Yes. This has gotten hammered over the past few weeks, and given that I have covered this company for the past, it's been like 5 months since I made my last video, like 6-7 months in terms of when I made my first video, I've been bullish on this company's business model all the way. The people that use it love it. And one of the biggest bear case scenarios for it is, hey, it's hardware. People buy their hardware and probably won't end up buying any more for maybe like 5-10 years to come, that kind of type of thing. Obviously, kind of makes sense. It's not a software as a service business model where people are consistently buying subscription-based products on a monthly basis. People may be buying products regularly, but not as kind of regularly as a subscription-based business model may. But I look at this, I'm looking at kind of consumer habits in terms of people wanting the best and how Corsair continues to innovate in terms of new product launches and continuously upgrading the products that they have. And I don't really see that as a major risk. This company has continued to grow, continued to execute, and continue to gain dominance in the gaming space. And I think it's only a matter of time before this thing reverses. So my plan over the next few weeks is to continue watching this one. I probably will end up adding it at some point if it does kind of stay at these levels. Honestly, there's nothing for me to say. I look at my model, I see opportunity, and I'm going to take advantage of that opportunity. So anyways, thank you all so much for watching this video. I really, really do appreciate it. If you found some value in it, please consider hitting that subscribe button, and let me know in the comment section down below what your thoughts are on Corsair, their business model, and the opportunity that you see. Either way, thank you so much for watching, and I will see you all in the next one. Bye-bye.